the narrative of storing value is really Bitcoin's use case. Ethereum's use case is that it's actually going to be used. Wall Street now is going to be building its entire infrastructure onto the blockchain, and the blockchain they're choosing is Ethereum. So this is the 1971 moment where Wall Street is essentially capitalizing on tokenizing the entire world onto a blockchain. That's a huge opportunity. I'm not bearish on Bitcoin because I think Bitcoin will get to 1 million.
Ethereum may have started as a fork of Bitcoin, but today it serves a fundamentally different purpose. Where Bitcoin is digital gold, a secure, decentralized store of value, Ethereum is programmable money. It introduced smart contracts, allowing developers to create decentralized applications that live permanently on-chain. Powering this innovation is the Ethereum Virtual Machine, EVM, enabling anyone to build applications and entire economies atop Ethereum.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Ethereum differs from Bitcoin. Actually, Ethereum was initially a fork of Bitcoin, by the way, but with an added feature, which is smart contracts. So what they wanted to do on Ethereum was to say, let's use blockchain technology not just to store value, but now to store information. Ethereum is as a smart contract platform, actually also has something called the EVM, Ethereum Virtual Machine. So you can run entire programs and conditional contracts on Ethereum. And Ethereum itself is 100% reliable. It has not had a single moment of downtime since inception. It's one of the few blockchains that has never been down. And then if you needed to do more things on Ethereum, you can build what they call layer 2s on top of it. So Ethereum is essentially infrastructure that now is catching the attention of two industries. The first is the financial sector. The stablecoins became really viral, a breakaway product for crypto, and that's like the ChatGPT moment. You know, there's $250 billion worth of stablecoins. The vast majority of those are minted on Ethereum. Then the Genius Act was passed by this administration and this Congress, and that greenlighted the proliferation of stablecoins onto the blockchain. So banks are now building stablecoin products. That Treasury Secretary Besant thinks that could get to 4 trillion. That's exponential growth, burning gas on Ethereum. And then we have Project Crypto, which is the SEC building, wanting Wall Street to build on the blockchain. Now, all of that collectively, from a Wall Street perspective, is like 1971 for the dollar. And what I mean by that is, in 1971, the dollar went off the gold standard. So in 1971, the dollar became synthetic. And gold was what people bought as a hedge against that synthetic dollar. So you had gold as the trade, and that would be the Bitcoin equivalent. But actually, the synthetic dollar is what created the rails for Wall Street to build all their future products. The futures, curves, derivatives were all because the dollar was a synthetic product. If the dollar was backed by gold, Wall Street would be still a very small business. Well, Wall Street now is going to be building its entire infrastructure onto the blockchain, and the blockchain they're choosing is Ethereum. So this is the 1971 moment where Wall Street is essentially capitalizing on tokenizing the entire world onto a blockchain. That's a huge opportunity. The second story arc benefiting Ethereum, though, is AI, because now we're moving towards an agentic AI world, but with real products. Like, AI is principally been trained on like internet and, I don't know, social media, but it hasn't been in the real world because it hasn't ingested us as we moved and physically moved or even have independent products. That's a vast amount of new information for AI models to ingest and store. But then now you have to be sure that all the instructions being sent back to the robot are proof of the originator. You know, in other words, you need a token I mean, LLMs use tokens anyways, but now you need like a token that interacts across chains. And that's where AI is going to build on Ethereum, because you essentially need what they call proof of human. We need to prove that this lawnmower got a real instruction from another chain or another vendor. And so that is all being built on Ethereum. Before this year, I would have considered Ethereum like a really good, reliable chain, but without any products being built on it, it shouldn't really do well. But because of what's happening with AI and with Wall Street and, Project Crypto, I think Ethereum's essentially the value of its protocol layer, like, Union Square Ventures calls it the FAT protocol, is now going to be more valuable because we're tokenizing everything on Ethereum rather than just gold. Like, so if gold is a $21 trillion market, tokenizing the real world is orders of magnitude larger than gold, which means Ethereum probably will flip in network value versus Bitcoin.
Flip as in outgrow it?
Yeah, it'll have a higher network value. So, I think that the distinction to make is that I'm not bearish on Bitcoin because I think Bitcoin will get to 1 million.
But what about all the other cryptocurrencies?
Well, other cryptocurrencies don't have the network value because otherwise they're just software chains, meaning...
So you don't really believe in Ethereum as a currency? You believe in it for other reasons?
That's right. Yeah, I think that the narrative of storing value is really Bitcoin's use case. Ethereum's use case is that it's actually going to be used and burned. So Ethereum gets consumed through gas fees, and then staking is how you produce an Ethereum. That inflation rate has been below Bitcoin, actually. So if you look at it as monetary supply, Bitcoin's monetary supply is actually still growing faster than Ethereum.
One of Lee's most powerful points? Ethereum is being accumulated and held like digital treasuries. Stablecoins currently hold over $208 billion in U.S. treasuries, making them the 12th largest holder globally. If the sector scales to $4 trillion, as the U.S. Treasury predicts, it becomes the #1 holder, overtaking Japan and China. That means Ethereum's gas layer will backstop the global bond market.
Tether created the first dollar stablecoin, and they built it on Ethereum. Their idea was someone doesn't always want to be long Bitcoin or another crypto. They want to be long something stable. And crypto holders weren't really allowed banking access, so they didn't have an off-ramp. So Tether built a dollar-backed coin called a stablecoin, USDT. Mm-hmm. In 2017, Google and the UT Austin wrote these papers claiming Tether was just a fraud. And the only reason crypto went up was because of Tether creations. Okay, so in other words, it was immediately tried to be viewed as something fake. But then Tether has since grown, and of course stablecoins have really grown in popularity. Merchants outside the US love stablecoins because they don't suffer the chargebacks. Credit card companies merchants eat fraudulent transactions. So merchants, they get paid, it's just as good as getting $1. In Turkey and a place like India, Tether trades at a premium to the dollar because people prefer to get that over cash because it's hard to get robbed. You can use a stablecoin to buy real estate in Dubai now using Tether, like $100 million transactions. So it's actually being used in the real world. Actually, stablecoin usage, 80% is outside the US. But the reason the US administration starts to like it is, number one, crypto is essentially 100% quoted in dollars. In GDP terms, the dollar is 27% of global economy. It's 55% of central bank reserves is the dollar. It's 80% of traditional financial market pair quotes. So the synthetic dollar, which happened in 1971, made the dollar 80% dominant. In the crypto world, the dollar is 100% dominant. So the US wants us to financialize into crypto because everybody prefers to get $1. Collectively, the stablecoin industry is about $280 billion of outstanding dollars. They are now the 12th largest holder of treasuries in the world. Japan owns $1.2 trillion of treasuries. Treasury Secretary Bessent, thinks this market will get to 4 trillion. That would make stablecoins the largest holder of treasuries in the world. So it'll be backstopping the entire treasury market soon. Well, the Granny Shots ETF, and it's called Granny Shots. It's named after a way of shooting a free throw in basketball, underhanded. And the idea is that an underhanded free throw has a higher probability of being a successful shot because it's the best physics move, but it doesn't look cool. And so our research launched the Granny Shots portfolio in 2019 as our best ideas list. The way it was constructed is we said that the S&P is essentially driven by a handful of companies tied to the most important themes. And at that time, we identified the themes as AI, labor shortage, cybersecurity, monetary policy tilting, ISM tilting, millennials, things that we know are actually logical. And we said in order for a stock to be included in that list, it had to be tied to 2 themes because we figured 2 sails means that you can catch the wind from 2 different directions, you know? And it worked really well. That's for 6 consecutive years it outperformed the market. So we decided to launch it as an ETF last November to make it available to the public.
And what's the performance been since November? It's shortish term, but...
Year to date, Granny Shots is up over around 18%. So it's outperformed the S&P, which is up around 9. Morningstar ranks it as top 2 percentile. So it's out of the 1,490 large cap active equity funds, we're top 30. It's rebalanced every 3 months. One thing to keep in mind is that it owns 30 stocks. So it's really the 30 biggest sort of drivers of the S&P, but it's equal weighted. So it's not benefiting from just owning the Mag 7. In fact, year to date, it's outperforming even the Momentum Index, MTUM, Granny Shots. And it has a lot of financials in it and has some healthcare. So it's really a diversified fund, but I think it should be viewed as we've identified the companies that are really driving the S&P, so the other 470 aren't driving earnings for the S&P or the price appreciation.
To sum it up, Tom Lee isn't just speculating on Ethereum's price. He's laying out a macro thesis, one that spans finance, AI, global trade, and even sovereign policy. Ethereum isn't just digital oil. It's programmable infrastructure that Wall Street, banks, and global governments are beginning to rely on. Whether you're an investor, developer, or simply curious about the future of money, understanding Ethereum's evolving role is no longer optional.